Hello everybody and welcome to this week newsreel. Bogdan here, your host for the next couple of minutes. I hope that you are all doing great. And guys, without losing too much precious time here, let's start with the quiz question for this week. It involves Greece and it goes like this. So to whom did Greece exported the most in terms of value, of course, in 2021? And the options here are Italy, Cyprus, or Germany. And guys, the correct answer is Italy with some $4.6 billion worth of exports. It was followed by Germany with close to $3.4 billion, while the third option, so Cyprus, came on the third spot with roughly $2.8 billion. And now that you know Greece's main export destinations for 2021, at least the top three ones, let's take a look at the Freightos index for week 36. And basically we see that it fell 8%, so bringing the absolute value to $4,862, with big movers here involving the head hauls from China to North America, East Coast, and North Europe. And basically the former went up 4%, while the latter fell 14%. And now moving to the main sub-indexes here, for the one connecting China to North America West Coast, we have a 10% drop, which it's translating into $4,314. While for the sub-index connecting China to North America East Coast, as I've said, we have a 4% increase week over week, which brings the total value to $8,704. Now for the crossway sub-indexes, we have here double-digit fall in terms of relative value for both head hauls. 14% for the China to North Europe sub-index, as I said earlier, while for the other ones, so China to the Mediterranean, we have a 10% fall, which translates into $8,648. And guys, with freights more or less in free fall, BCOs, importers, and shippers are now actively involved in renegotiating their contracts with the container shipping lines, of course, realizing that now it's their time to flex their muscles. Somehow the party for the container lines, from my point of view, it's about to end. And this brings me to my first news coming from splash247.com. It's an extensive article, quite long. It quotes a couple of industry leaders here, not necessarily aligned when it comes to certain things. And as usual, my recommendation is to always take these statements with a big pinch of salt. But overall, it's worth reading it. So I highly recommend you to do this. And guys, while you're reading it, if you will read it, of course, please open the following two tabs in order to see the positive correlation. The first tab, it's the Global Supply Chain Pressure Index, where you can see that although global supply chain pressures have been decreasing, at least from April this year, they remain at historically high levels. And the second tab that I recommend is the HARPEX index, which basically reflects the worldwide price development on the container market for on the charter market, sorry, for container ships. Somehow, if you ask me, it lags behind the global supply chain pressure index with a couple of months. And this is really worth following up, especially in relation with the new build orders coming from the container lines. Personally, I will watch very close those shipping lines with a large number of new ships on their order book relative to their owned ships. And sooner or later, my guess is that we will see the first news with canceled orders coming from the big guys. I think it's just a matter of time, and my educated guess tells me that those owning the assets, so the vessels, basically the container ships, will be better positioned when the price war starts, if it didn't already started. Anyways, it's my opinion, of course. Let's wait and see how things will develop further. Until then, let's dive into the actual news here. And the first one is coming from indiatimes.com, as exports to the United States keeps India in race to be next China. at least in terms of low-cost, labor-intensive products, as India made it to the top 5 suppliers of Christmas decorations items and t-shirts bound for the United States, as of course buyers all over the world are beginning to find new suppliers out of China in the face of rising labor costs and COVID-related disruptions. Here we have also a breakdown with the US imports of t-shirts. India seems to have surpassed El Salvador in 2021. But again, from what I can see here, India's exports in 2021 actually fell both in absolute and relative values. El Salvador, of course, is very, very close, so still too early to say that this is a trend. But personally, I think that more and more United States and European importers are looking to diversify their sourcing strategies, and India, if you ask me, if plays well this card and recognizes this opportunity, could become not necessarily a new China, but a transitioning one, if you want. So this is the first one. Now moving to my second one. I have two basically coming from USDA website. It's about opportunities of US agricultural exports. But I think that the results here and the findings are also relevant for other exporters as well. The first document involves the exports towards the European Union, Spain and Portugal in particular, with a nice executive summary and some macroeconomic perspectives on both Spain and Portugal, with specific products suitable for exports. I won't cover the entire article, but basically the best prospects for Spain include here tree nuts, like, I don't know, almonds, pistachios, and walnuts, but also pulses, sweet potatoes, or dog and cat food. While the exports towards Portugal includes soybeans, again tree nuts and dog and cat food, but also condiments or sauces, bakery goods, cereals or pasta, with health, well-being and sustainability driving the consumption in 2022 and beyond. The second document, guys, it's about the export potential of premium wines towards Taiwan, with some tables and charts about the wine market size in Taiwan, trade and consumption. So guys, if you work in the wine business and you want to enter the Taiwanese market, I highly recommend you to read this article. But pay close attention at the end of this article, as the tax and the tariffs are in relation with the imports coming from the United States. Now, changing the register a little bit, let's move to my next news. It's coming from the EU Trade Commission, and it covers the extension of anti-dumping duty imposed on imports of certain woven and or stitch glass fiber fabrics originating in China and Egypt to imports of woven and or stitch glass fiber fabrics consigned from Turkey, whether declared as originating in Turkey or not. And basically in April 2020, the European Commission imposed the definitive anti-dumping duty on these two particular products. There was an investigation going on. It went on for 2 years. If I remember, the affected parties, so China, Turkey, Egypt, and a couple of European importers and manufacturers, challenged this measure, but as it turned out, both Chinese and Egyptian exporters circumvented the duties by using Turkey as a hub for their consignments. And another company based in Turkey, so Turkish Composite, was found to be involved in the circumvention practices. So the exemption they've requested cannot be granted. And guys, if you're passionate about how an investigation like this looks like, I highly recommend you to read it. Otherwise, this is a reminder that trying to trick customs, or I don't know, play with the rules of origin, value added and circumvention, it's a tricky endeavor. So always play it safe. Now, moving on to my last news, I have an article coming here from the World Economic Forum, and it's a nicely compilation of charts capturing the state of the world's economies and markets for 2022, from, I don't know, price pressures and eating expenses to the world's slowest roads or social unrest events. Is a nicely dashboard somehow capturing world's health system if you want, and I highly recommend you to look at it and analyzing it for a couple of minutes. And as usual, you'll find the links in the for the entire articles in the description down below. And guys, with this being said, that's all for today. Thank you all for watching. I really hope that you've liked it, and as usual, until next time, keep your business safe. Thanks.